Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we are talking about Tesla's new production milestone at Giga Berlin. We also have new incentives added by Tesla ahead of quarter end, some updates on the Cybertruck, and more. Decent start to the last week of the quarter for Tesla stock, up about 0.75% today to $191.81, while the Nasdaq was down 0.5% on the day. Alright, let's get right into the update on Giga Berlin. Tesla over the weekend on Twitter confirmed that Giga Berlin has hit a 5,000 unit production week. It's a huge milestone for Tesla. This is what Tesla usually refers to as being volume production. It's about 250,000 vehicle per year run rate. So hitting that target less than a full quarter later, really not too far off of that goal. What I think is most exciting about this though, is that Tesla accomplished this step up from 4,000 vehicles per week to 5,000 so quickly. It was actually only 27 days ago when we talked about them hitting 4,000 for the first time. That's almost a third of the amount of time that it took Tesla to go from their first 3,000 vehicle week to their first 4,000 vehicle week at Giga Berlin. That took 70 days. So you may remember that last month we took a look at how this ramp had been progressing based on those milestones that Tesla had shared with us previously. And despite all the challenges, if you look at this graphically, the ramp seemed to be progressing actually quite smoothly. And although we did have limited data, we could extrapolate that pretty nicely, getting pretty good fits. And that seemed to imply that a 5,000 vehicle week would happen probably for the first time in April. So if we add this new data point, it's pretty well ahead of what the progress so far would have indicated. Now, some of that could be attributable to differences in shifts. Things like that can be a little bit more step changes in terms of the production rate progress, and maybe that rate of progress then doesn't continue necessarily. But it's still really nice to see this happen, and for the first quarter, that means that there's probably been pretty strong production from that period of time where we first hit 4,000 to now hitting 5,000. It also means that Tesla should be on a fairly nice track to hit 10,000 per week from Giga Berlin, maybe by the end of the year, maybe first quarter next year. We know they just went from first deliveries to 5,000 per week in 1 year, so presumably at the latest, that 10,000 vehicle week should be happening Q1 next year, if not even sooner, like an improved progress trajectory like we see here would imply. We'll talk a little bit more about exactly what this might mean for Q1 production and deliveries later on this week, but the other thing to kind of bring in here and consider is Giga Texas. We have been seeing these updates for Berlin, for Texas at each of these 1,000 vehicle milestones. We've now got the 4,000 vehicle and the 5,000 vehicle milestone for Berlin and no further updates on Texas. So Texas seems to be still below 4,000 a week. So that is a little bit more disappointing, but at the same time, there are more complexities happening right now in Texas, particularly with 4680s. And then I think we all kind of hope that there is at least a little bit of focus going on at Giga Texas for the Cybertruck right now as well. Still, hopefully we'll get another update from Tesla on the Texas production rate soon. Alright, next up we've got a couple of new quarter-end incentives as we're now in the last 4 to 5 days of the quarter. In the United States, Tesla has added an incentive for the Model S and X, and that is 10,000 free supercharging miles if you take delivery of a new S or X by the end of the day on March 31st. Canada also eligible for this, but kind of hurt by the exchange rate or conversion rate there. They get 10,000 kilometers of free supercharging with those same stipulations. So right now in North America, it doesn't appear that Tesla is doing any additional incentive like supercharging miles for the 3 and the Y, just the S and the X right now. And of course, this follows the recent price cuts that we have had on the S and the X. But with so few days left in the quarter, this does seem to be something that is a little bit more targeted towards inventory that new buyers can go and find and take delivery of just within a couple of days versus new orders. Some new orders may be deliverable, but that would just be Tesla fulfilling that from their available inventory. So that seems to be kind of the target here, and as we have talked about, it probably makes sense for Tesla to try to move through this inventory because they are in that transition period right now to Hardware 4, and Tesla still seems to be working on clearing out store inventory as there are still a lot of demo S and X vehicles listed on Tesla's website that do have some discounts for being demo vehicles. From the inventory data collected by Matt Young, we can still see that there is a decent amount of inventory for the S and the X in the US. It does seem to be pretty stable over the last few weeks, but it's always kind of hard to tell if Tesla is showing all available inventory. Anyway, we've talked plenty about the situation for the S and the X. I think it's probably a positive sign that we're not really seeing much on the 3 and the Y in the United States. Tesla seems pretty content with where that's at, and they also have the benefit of the uncertainty around the EV tax credit after March, which for at least some of those trims will create some natural urgency to take delivery this quarter. Outside of the US, a little bit different situation. Tesla has added similar incentives. We'll talk about those, but first Tesla has also added the loot box for Europe and the rest of the EMEA market. That launch is effective as of today, and Tesla already using that credit system in the loot box to incentivize deliveries before the end of the quarter. We can see here on the new vehicle inventory page for the Model 3 in the UK that Tesla is promoting that customers that take delivery by March 31st will receive the referral credit equivalent to 3,000 miles of free supercharging. This does seem to apply for all vehicles, but again, this would be targeted more at inventory and also just a small incentive to encourage people to actually take their delivery before the end of the quarter, rather than trying to schedule it for a couple of days later for whatever reason. So pretty common for Tesla to offer these things around quarter end historically. These are certainly not the most aggressive incentives we have seen, but there does seem to be some push from Tesla this quarter to maximize deliveries. We've definitely seen a delivery wave with the China insured vehicle numbers. Maybe not quite as aggressive as we have seen from Tesla historically, but doesn't seem to be a continuation of the flattening that the last couple of quarters seem to be starting to show. So I don't know, maybe Tesla with the stock price a little bit lower just said, hey, we're going to maximize Q1 deliveries. Maybe some other reasons, who knows, but it definitely adds some intrigue to the Q1 production and delivery report, which again, we'll probably get on Sunday. While we're on sort of a pricing related topic here, we interestingly today had a couple of analyst notes that were talking about Tesla's pricing going forward. The first was from Adam Jonas of Morgan Stanley, talking about how some of the price wars that we have seen on EVs in China may trickle down to an extent and end up with lower prices elsewhere. I think we have already seen that with Tesla's big price cuts in Europe to kick the year off. Obviously, China demand is intertwined since a lot of supply for Europe has come from Giga Shanghai. From that action alone, we can see that some of these pricing changes are intertwined. That specific example for export versus domestic sales for China production, it's probably heavier for Tesla than it would be for most. But the other interesting thing here to consider, which Jonas brings up, is that as these prices come down and as maybe supply rebalances a little bit with a lower price market, for example, we've already seen some production halts from BYD that may lead to a surplus supply of batteries. And Jonas says that they're already seeing battery inventory grow in China. So prices can come down there and those can be exported and perhaps lead to lower prices on EVs internationally as well. So we've talked about this dynamic with raw materials, how those prices have come down, but it kind of runs through the whole chain. And those kinds of dynamics take time to work their way through this. And that's why Tesla has talked about, hey, we're cutting prices right now. We may not immediately see massive cost of goods sold relief. That will take time to show up in the financials, but we do expect that is coming. So that's kind of what Jonas is talking about here, but then just taking it a step further and saying that that will get reflected then in prices for consumers. Barclays also out with a new note on Tesla with a similar, though less specific line of thought. They still have an overweight rating on Tesla, still a $275 price target, but they say that they believe that price cuts are likely to be core for Tesla in unlocking additional volume, especially as Tesla ramps up further capacity. So a little bit more vague from Barclays. But I guess sort of the point is that people are starting to get a lot more comfortable with Tesla's pricing decisions and getting back to the belief that that is something that is going to happen long term, but that's something that can be okay and Tesla can still be a phenomenal business. Again, it's going to take some time to work through, but hopefully the financials over the next few quarters can start to show that as well. Next up, as we had talked about on Friday, we had seen the initial signs of FSD Beta version 11.3.3 starting to roll out to employees. That continued to customers over the weekend. It now seems to have been a broader rollout than 11.3.2, so hopefully this is the version that goes wide to the current FSD Beta fleet. As we had talked about, no changes in the release notes. Elon did provide a couple of comments on this on Twitter though, saying it's close, one more round of refinement needed, then seemed to clarify that a little bit later on, saying that he was talking about still needing to convert a few of the legacy neural networks from using single cam, single frame to surround video. Anyway, it'll be exciting to see version 11 in more people's hands, start to get more reactions in different areas and things like that. I still haven't had much time to put a ton of miles on version 11 yet, but so far I've been liking it in general. I really want to do more highway miles, but so far I've seen some nice improvements and haven't really seen any noticeable regressions as of yet. Next, we've got a couple of quick new looks at the Cybertruck. Gregor Truck on Twitter, as well as on the Cybertruck Owners Forum, shared a video and an image of the Cybertruck out driving around. Elon commenting on the video saying Cybertruck will change the look of the roads, finally feels like the future. As for the image, this one happened to not have the wiper attached, so you can kind of get a feel for how that would look, although again, it's not the highest quality of photos. I'd refer back to my video from Investor Day if you do actually want to see it in high quality. Personally, the wiper attachment doesn't bother me too much, but I know some people have strong feelings on that topic. Alright, last couple of items. We did talk about this last week, but Tesla has announced on Twitter via Tesla Asia that Model S and X deliveries have now started in China, talking about the refreshed version of these vehicles, of course. So nice to see Tesla sneak those in before the end of the quarter. Then the other thing to watch for China overnight tonight, we should be getting the China insured vehicle numbers for the past week. We've been seeing really strong numbers there. Last week was almost 19,000 vehicles. Hopefully we see the strength continue. If we get a number that's 15,000 or more, that should put Tesla at a record for insured vehicles in a quarter, with still 3/4 of a week left to go. So we should have those numbers to go through tomorrow. And then lastly, Tesla on Instagram today has been teasing their launch in Turkey for April 4th. So we'll keep an eye out for that next week. All right, that is where we'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Tuesday, March 28th episode of Tesla Daily. Thank you.